warm welcome to Digital Dialogues powered by CXO Digital Paths. Insurance sector is undergoing a seismic transformation driven by the convergence of digital innovation, evolving customer expectation, and an increasingly connected ecosystem. And at the heart of it, technologies like AI, Gen AI, blockchain, etc., they are becoming embedded into the core of this entire financial or say insurance processes. They are not just improving efficiency, they are also redefining the very fabric of risk management, customer management, and product innovation. In this context, we are excited to engage with our guest today in a conversation, who is Mr. Sameer Singh Jaini, who's the founder of the Digital Fifth. Hello, Sameer.
Thank you, Pratik, and thank you for inviting. I'm so happy to be here and hope to learn from you as well, your insight as well. So thank you for the invitation.
It's our pleasure, Sameer. And going straight forward to my first question, there's so much of buzz in terms of digital transformation, in terms of the convergence of emerging technologies, be it your artificial intelligence, IoTs, blockchain. They are transforming the overall landscape of the way enterprises work. And specifically to the conversation today, they are redefining the word risk in insurance from static profiles to dynamic and real time assessments. So, how do you see this convergence happening?
I think the journey for convergence has technically just started. While there's a lot of buzz, I think we need to do a lot of work to ensure that it moves in real action. Uh, Fact of the matter is that the way today a risk assessment or underwriting is done is still primarily around a one-time assessment on the risk side, saying what is your profile, some question, maybe you will do some medical and all of that, and that's where you leave, right? So this is the current scenario, and then of course some progressive insurers are also solving it differently. But what we see going forward is that primarily risk is on you, right? The way you have in lending, which is where you've done a lot of work, is you always have a early warning signal. So same way, how do you know that you assess the customer at the time of taking that the guy on board, but you also check the customer as the journey is going forward. So let's take some few examples here and there. From a medical perspective, of course, there are certain insurance firms which have launched frameworks by which you can check the steps taken by the customer or some activity taken by the customer, so that you know the risks the are increasing or reducing. For example, some people are just not moving, so you can actually assess the risk levels to it. So right now, the engagement level in each area is to be created. On vehicle side, again, we look at the static insurance, which is done even now in most of the cases, maybe 99% of cases. It's not on usage, right? You're not checking the customer profile. I mean, I used to hear that if your color is red, then your risk levels are high. I think how nonsensical, right? We're moving towards real data where we're able to figure out how the customer is driving, the person is driving, the risk he's taking, how many sharp turns the person takes. And that kind of data, if you're driving more, then you should get more insurance. If you're driving less, why are you giving so much of insurance? So I think that data is now coming in big picture, and that's going to get used. But in order for it to work, we still have to figure out how to get data in a very structured way, only for the purpose it is required. And we'll talk about later on the data privacy side. But generally, how do you ensure that you get only the right data and you use it continuously? Now, fact of the matter is that, do you have a backend engines which can take that much of data? One of the learning which from a lending side can take is that when we used to bring a lot of new data, the underwriting process will not change. It's still largely static. And in life insurance, even more, you have to figure out the risk levels over a period of time. So how do you take this data on the risk side and saying, okay, if this is the data you're getting, how will it pay out on long time? So a lot of work to be done on the data side and all of that. But I think risk levels are changing. On a blockchain perspective, I think I would put it like this. We are still slightly away from the end-to-end realization, but maybe let's give ourselves another 3 to 5 years because this ecosystem is common. We are not looking at the way you have other entities on, maybe let's say on the lending side or a payment side, where the let's say UPI is already built. There's no point in blockchain there, but in the insurance side, you actually can do. Also, the transaction volumes are not that high. The speed is also not very high. So all attuned for a blockchain kind of use case as well. There are only, I think, 61 odd manufacturers there. So the process can also be built around that. So I have a higher feeling that we can do it. I do know that some of my friends were doing these programs for some insurers or agencies maybe a few years back. It's not come to fruition as of now. But I think we have to give technology some time before it comes in the real. The way things have changed in last few years on the payment side, I'm sure with things like Bima Sugam and others, this will change on the insurance side as well.
Okay. And Sameer, you mentioned that, how data has been utilized, collected, and then seen in different KPIs, or say maybe, how enterprises are using in terms of dashboard. So I think with this request, APIs are also moving a lot towards API driven model. So what fundamental shifts in terms of compliance, customer awareness, or even product design do you foresee which will become essential in the long term trust and adoption of these models?
So maybe I'll try to go piece by piece. I think first, let's say for this kind of privacy to be adhered to, and maybe we are looking at when API driven. So let's just take it few business changes and then we'll see what controls have to be done. So on the distribution side, for sure, these distribution has to be done on third-party platforms, right, where the engagement levels are higher. Nobody downloads insurance platform and says, "Oh, I want to buy some insurance." Right? There's a need. For example, when I was traveling outside the country, then you would typically go to a and buy that travel activity travel, let's say, tickets, and the part of the journey you will end up doing it. So being able to be create a product which is simplistic or slightly easier to sort of understand and then give as APIs to third party platforms is very crucial. So I think embedded insurance is growing and has to grow further. And we have to make it more easier and comprehensible, right? So on the product side, we still have to figure out that how do we ensure that the way we have been able to create maybe a some of the travel kind of simplistic products, can we ensure that the manufacturing of those products which are there on, let's say, health and others also eased off? I mean, technically, I am right now trying to buy insurance from a few insurance firms, and every time I read it, I get read with the complexity of the product itself. So I think somewhere we need to figure out what are we selling and how are we selling, and can we ensure that while assisted movement will still be there, can we give something to the customer that they understand faster? So manufacturing a product which is more acceptable and understandable is crucial. Just to give you an example, I never knew that on my medical insurance I could actually do an add-on for, let's say, 90 lakhs more, and it is less risky for me, but my insurer never sold it to me, and I could only sort of hear from somebody else. So I think, how do you get that kind of engagements which is API based? So this is on the embedded side, right, product side. You also have to use APIs from third party, from a KYC perspective, from, let's say, account aggregator. Right now, let's take an example. You want to check that on the customer side, that okay, how is he? So somebody says that I don't smoke, and I, in this example, somebody gave it to me, and this is realistically example that an account aggregator, you will get to see that the guy is actually doing a maybe 15 rupee debit or 18 rupee debit on a regular basis 4 times a day, which is a very typical example of somebody smoking. So you can track the data also. The point is, you have to be able to take data at a later stage as well and embed in the journey. So onboarding times, API usage, when something happens on the data usage. And the third part is insurance largely is a product which is only at the fruition level where the claims happen. Unlike a lending where the transaction is there upfront, customer takes the money, which is a critical need. In this case, the customer has taken insurance when something happens to him. It can be a medical emergency, or the vehicle is broken, or he is under severe stress and is in hospital. In all cases, can ensure that the data which is available. For example, when my flight started and lands late, you have data, right? Can you use all of those through APIs? You knew that the guy is flying, so you gave them that insurance. But when the flight is lands late, you have the data. Can you take it up and complete the loop instead of saying, okay, then you have to claim back? So I think a lot of steps on which APIs have to be built for, and all of that will result in maybe changing your underwriting life cycle, or maybe servicing side. A lot of changes to be done. So a bunch of work to be done. And I think from a product perspective and customers, okay, so let's look at the customer side. Customer side, I think good news is that insurance agencies have insurance firms have also come together. The way mutual funds sahi hai, similar examples have already started. So they're already doing these ad campaigns. So I think more and more we communicate to customers that about the simplicity of the product, why they need it as well, rather than scaring them saying तुम्हारे मरने के बाद क्या होने वाला है. Make them understand the need. Make them understand. For example, I'll give you one very simple logic. On one side, when let's say this is a real case, right? We take insurance. And insurance, let's say in many cases, is nominees there. But interesting part is nominees are not onboarded at the time of the initial stage. God knows why. So why would you not communicate? It's not just an API, human touch, right? If something happens to me, my wife will get the money. But is my wife made aware of by me? One part. Is my wife made aware by the insurance company? Second part. But that second part has never happened, right? I have taken 4 insurance policies. My wife has never been informed by them and not even onboarded. Only when I die, the information will go. So can we build products which are more human by nature and engaging with the customer rather than going cold? So I have a lot of things to be done as we improve the products as well.
Right. And you talked a lot of personalization aspects, Sameer. And I'll go to the first part of your answer where you were talking about that, how honestly even the consumer are giving those information that, whether the person is a smoker, for how long it has been. And there comes this angle from technology when you're wearing those wearables and telematic devices which capture all this information. They are capturing your heart rate, your pulse rate, and everything. With the adoption of these devices by the users and insurers willing to get the access to this kind of data for various aspects, for their overall assessment of the premium amount, or maybe for the hyper personalization of the products that they're offering or the services. How do you see the balance that needs to be created between this hyper personalization, and against it there's also a question of ethically using this really personal and medical data of the consumers?
So I let me give a very basic perspective. Some misuse will happen. Okay, this is more to look with at
We
the.
need to be prepared for that.
We need to be prepared for it. So there's a greed takes over, right? At some point in time, there's so much of money, but my personal view and the way DPTP is written and the control points and then the fines which are attached, I believe that next few maybe 3 to 5 years it will take for us to have a stable world where people will be scared of misusing it. On day one, will we have 100% ethical use? Not at all. I think there will be slippage will happen, but maybe 3 to 5 years. And for that, certain control points, for example, the data principle within the organization, maybe the data security team has to become more and more powerful. So there has to be more controls which will get laid down within the organization, which will control it. DPDP is exactly around that, right? Saying, boss, you are taking so much of data. Where are you using? If we find you using it for incorrect reason, you'll be fined. So it's a journey in progress, but it'll be 3 to 5 years before we reach a stage where people will be really sensitive about how they use, what they communicate. If they've taken data for X, they're not selling for Y. And also, one thing is to say, okay, I've taken consent. But second is to ensure that customer understand what consent they have given. I'll give you a real example. At home, but it's not really from the same industry that we gave a consent for my daughter actually gave a consent for something which was not supposed to be. The guy just told that, okay, I'm installing this, give me a number. And my daughter thought it's a small activity. They did it. It was actually activation of my particular service at home, which was not possible for a month. But the guy wanted to, so we escalated to the boss, and the boss said, "Oh, usko number पूरे करने थे." Right. So that greed was took over. Right. He knew that he was doing incorrectly, but he took over. Right. So I think it will take some time, but the good news is that the DPTP is there, and then tech controls will start kicking in. So if you do find some deviations, the way you have fraud risks, similarly this risk will also get detected. Is there a framework which exists today? Not at all. But maybe for internal risk and those issues, I'm sure some tools will get built which will track this out. And if there is any deviation, the action will get taken.
Okay. And going by the example, Sameer, that you have just mentioned of your daughter, if I just use the same example of DPDP Act, so one is the consent that consumers are giving that yes, you can utilize this information. Second is utilizing or say exploiting that consent within the organization, because that data can be even used by the marketing team of the organization who actually got the consent for their hyper personalization aspects, or even by the policy makers who are making the policy for that specific consumer, laying down and calculating all the premium amounts. So if you're talking about DPDP Act, that consent is only by the consent by the consumers, or and how is it valid within the ecosystem of the organization?
So let's look at the way that consent is written. Let's say if you've taken a consent for maybe a one single product and very specific product. Can you use it for selling another? Maybe you have taken it for maybe term insurance and you want to use this for maybe ULIP. Can you do it? I guess it is not. Whatever I have understood, it's not. So you can't go breach it. Also, there's always will be a attempt to do generalize the consent and technically misuse it. We've seen it when we see some of the consent. It is not done in a way that customer also understands and they know. You know it's always a parlance thing that in the terms and conditions something was written in the filings. So those issues are there within the organization. You can't use it for general purposes. I think that sensitivity is what we are right now trying to push to the market, saying that boss, it's not that simple as you thought, and you really can't take the risk saying, boss, I did let's say campaign for one, I got this data, now let me do something else with it. Those issues will not be accepted by the regulator for sure. So internal, external misuse of data will result in fines, and fines are all as much as wipe out your maybe the entire capital. So you better be aware.
True, true. And we are actually eagerly looking to uh, how critically and how ethically all these organizations would be utilizing and practicing this DPDP Act specifically for the insurance sector. Thank you, Sameer, for your insights. It was a pleasure talking to you. And what I understand that insurance as a sector is definitely pivoting towards accessibility, towards intelligence, being more compliant driven, being uh, agile also, and we are looking for a more illuminated path even as a consumers, how we will be looking forward to the terms and conditions from the insurance, and how insurance sector and the organizations, the providers, would be taking that path towards more meaningful innovation and customer experience for us.
No, absolutely with you on that. I think we are a country which is extremely low on penetration. We are, I think, less than 4% on penetration side. And from here to how do we get into double digits and below, beyond? And then, of course, you have government initiative, or we are saying that by 2047, insurance for all, right? So all those things in place. Next few years will go in rebuilding the industry from digital perspective. For example, onboarding one customer may take some any organization maybe something like 40,000, 50,000, or lakh to just onboard one customer. How do you bring it down as low as maybe 100 rupees, 500 rupees? Because that's the cost to spend, which is actually not going to use under underwriting. It's actually for expenses. So how do you ensure that expense goes down? How do you ensure that on the lending side, if you look at it, which is where we have strength, we see that let's say cost of acquiring one customer will be let's say less than 1% in most cases, whereas on this side the charges are as high as maybe 3, 4, 5, 10, 20, 30%, right? So I think those changes have to be done, and that will happen through the one, changing the policy structures, complexities. It'll be also about, as you said, technology, data APIs. It'll all be about embedding those insurance on third party. Also about maybe educating the people on all the processes and all of that. And at the end of the way we look at cost of acquisition, we have to look at differently. Can we cut it down by 70, 80%, and then ensure that the product goes cheaper to the customer? Let's just put it like, same insurance may cost me 30% less, and maybe I'll buy it or 30% higher, and maybe on top of that you also have a GST. It makes it extremely expensive. So if we optimize those journeys, optimize the cost, and ensure that all the benefits are given back to the customer, I think the country will change, and government is doing all initiatives to make it happen. So hopefully, as UPI movement of insurance will come, And while UPI had a benefit that you can pay better, but I think insurance has a benefit that you have the capacity to pay better if something happens to you, right? Which is more important. It's more like earning, and if something happens to me, will my wife will have better life? I think those prioritization has to happen. In insurance industry is always slightly behind. So you have the cycle of industry: payments first, lending second, wealth third, and now insurance. So this cycle has already played out in the country. Now as the insurance cycle is going to go up, and we should see amazing amount of investment in the industry, which is right now more focused on, say, the distribution side largely. You see a policy bazaar, or you see insurance they doing well, and you see some segments getting invested as well. Maybe you see some IPOs also happening. You see new manufacturers, but over in cycle we'll see investment happening in embedded side, investment in technology side, investment happening in maybe more and more manufacturers. So I think the market is ripe for scale, and I'm so happy that we are in a journey where every industry is getting rebuilt, and we are all part of the rebuild process.
Definitely, and we echo the same thoughts, because insurance as a sector is no longer just about protection. It's about accessibility, it's about personalization and awareness as well. And with all this technology coming, we believe the trust in the overall concept and those hidden terms and conditions gonna build more and more with technology.
I hope I read once and I understand what it is. Hopefully that happens soon.
Thank you so much, Sameer, and thank you to our lovely audience for being with us. Do watch out this space for more such conversations. Till then, take care and goodbye.